Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list. Questions floated to me from across the interwebs, in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribble down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at therogueagent.com. Also, keep in mind that nothing in this podcast is or should be construed as financial, investment, legal, or tax advice. In fact, nothing that I say in this podcast should be construed even as insurance advice, as I don't give individual advice blanket just across the internet unqualified to random strangers. So if you need any of that stuff, contact a licensed professional that you know, like, and trust, preferably someone licensed in your jurisdiction. And now for this week's question. Can I borrow more than the cash surrender value of my policy? I wish. No, you can only borrow as much as you have available in your life insurance policy. Your policy is really just collateral for the loan. So think of it like your home or maybe a business where you're borrowing against, the asset. You're not cashing it out. You're not selling it. And in the case of life insurance, the net present value of that asset is the current cash surrender value, cash value, right? So if you go to your agent will be able to tell you, what the cash surrender value of your policy is. So, it's not a mystery. Just get a cash value quote from either from the home office or for your insurance agent. And that'll be how much money you can borrow against your policy. Okay, the next one is there any way for me to get, is there any way for me to get policy information by email instead of them sending me stuff snail mail? I guess so. For most things, I think carriers are now switching over to like digital communications, either in an application, like a company application, or via email or something. So like MassMutual and The Guardian both have apps. New York Life has an app. I think Northwestern has an app too. I think all the big ones have apps now. That you can access policy information through and do most things online. And there's some limitations. There's some every carrier's got their own little quirks and whatnot on how that's going to work. But for example, Guardian does this. They have an app, and they essentially do this by default, where they're offering, or they're giving you access to policy information online. Through an online portal, through the Guardian or through the Guardian app. And MassMutual also has its own application, and where you can access policy information. You can initiate and repay policy loans and so on and so forth. Those apps are great. I have policies from both those companies. In fact, I have policies with New York Life, Guardian, MassMutual. I have all their apps. They're very modern mobile apps. They're very intuitive to use, that kind of thing, and it's very easy to navigate. And the apps look beautiful. They're easy to use, and so on. So it's I think a lot of carriers are moving towards that, and they look. I think maybe just looking to modernize things. It's weird because some of these carriers are like, hundreds of years, over 100 years old, 150, 170 years old in the case of New York Life and Penn Mutual and stuff. And yet they're looking at like, hey, how can we modernize things? I don't know. It's just kind of unexpected because they resist change. Like the old carriers resist change. So this is like a big step for them. The smaller and mid-sized carriers, I'd say like Penn Mutual, they don't have an app yet. I don't know if they're going to. They do have online access to policy information through a web portal as of this recording. But I don't know, a while back, I spoke to somebody, maybe I shouldn't name his name. He was the VP of in-force operations at Penn Mutual at the time. He might not work there, or maybe he moved around in the company or whatnot. But anyway, he shared some info with me about some of the online access for Penn Mutual policyholders. So basically, the eligible policyholders and contract owners that are getting paper communications, we're able to switch over and get the option to choose paperless delivery, and just basically get rid of all the stuff that's being sent to them in the mail. And they could get essentially e-delivery for like statements, like annual policy statements, billing notices, transaction confirmations, policy correspondence, prospectuses, financial and shareholder reports and financials, and a couple of other things. There's a few exceptions to that. Like if your premium is overdue, they're still sending, or the policy is in a TAMRA violation, which is like a MEC violation. Or if it's lapsed or in pre-lapse or about to lapse, they're going to still send out paper notifications. For e-delivery, basically just at least on Penn's portal, you just log into Penn Mutual's website, update the delivery preferences, and that's it. So, and if you don't, if your carrier, and I know I'm talking about just a handful of carriers, there's hundreds and hundreds of different carriers out there. So, a lot of carriers are moving over to just like online portals or applications and stuff where you can manage policies. If for whatever reason your particular insurance company doesn't offer any of that kind of stuff, obviously you're going to have to call them and find out. But carriers are moving over that. I think they're just looking for ways to simplify, and also like reduce, like getting rid of paperwork gets rid of a lot of customer service. Because instead of having to get let's say cash value quotes, the most common things people want to do is like cash value quotes, policy loans, changing beneficiaries, and making like minor like billing changes and stuff like that. And those are customer service intensive things, right? And so just to get a cash value quote, just open the app. You don't have to call, or email them or whatnot. And so a person doesn't have to, spend time doing that when you can just look at the information yourself. So it's a big time savings, probably a lot of money saved just in labor costs doing that kind of thing. All right. Next question. Can I borrow I'm not going to name this. This person has a name, but I'm not going to include their name. Can I borrow against my life insurance policy to buy Bitcoin? You could do whatever you want. Yeah, you could borrow against your life insurance policy for any reason. If you want to buy crypto or whatever, you could buy that. Now I'm not going to recommend whether legally, for securities especially, I can't recommend whether to buy, hold, or sell an investment. So this is not investment advice. But I can tell you that I've used my own policy to invest in different things. I can tell you about past investments. I won't tell you about current investments and stuff that I'm doing. I don't want anybody to get confused about, what they think or what they think I think they mean, what they think I mean. But I can tell you, like back in 2019, I borrowed against my policy to invest in Tesla. And this was before all the stock splits and everything else. And I held it until 2021 and then sold it and booked a 231.71% return. And, that was, I don't want to say it was obvious, because a lot of people, it wasn't obvious back then. It was just, and I don't want to say I was a genius either, because I don't think I was overly smart about it. It was just there. I saw an opportunity. Seemed like based on my knowledge of the company at that time, it seemed like the right time, the right circumstance to do something like that. It seemed like a really good setup for the company to make a return, for the stock to go up. And investing in Tesla directly, if I had just invested, instead of borrowing against my life insurance, investing in the company directly would have given me a great return. But leveraging my whole life cash values boosted that return even higher. Now, was there a risk? Of course there was a risk. What if Tesla went down? What if I lost a whole bunch of money? And I think and I've made by the way, like, this is a legitimate criticism. Like, what if you invested in a company and the thing just tanked, and now you've got your cash values tied up and you're losing money, and now it's costing you interest cost and you lost a lot of money? That's the downside. right? You've got to pay policy loan interest, your investment's down, it's costing you money, and you're not making money. And now not only are you losing money, now you owe interest to the insurance company. That's true. That's the risk. That's why you have to be very careful about deciding whether or not to do something like that. Yes, you can leverage your cash values. Yes, you can invest in whatever you want. The caveat to that is that you had better know what you're doing, right? If you think that but listen, and here's the other thing. You cannot eliminate risk. You can transfer risk, you can try to avoid risk, you can retain risk, but you can't get rid of it. The risk is there. The only thing you're deciding on is what you do with it. So I think there's, life is risky. That's why people buy life insurance, to transfer risk away from them. Now, if you borrow against your life insurance policy, you're taking on back some of that risk. But if let's say you're going to use these cash values to say, let's say pay for college tuition so that you can get a degree, so that you can hopefully earn more money, or go to a trade school. You want to become an electrician or a plumber or something like that, and you think you can make a lot. Maybe you think you can double your income. That's a bet. You're making a bet on yourself, but you're making a bet. You're taking a risk. What if you go to trade school and you bomb out? You just wasted all that money on spending money on trade school. What if you go and it just doesn't, for whatever reason, you're just not very good and you can't make a lot of money? That's a risk. You might not make it. You might spend thousands and thousands of dollars getting educated and then not see any benefit from it. The point is that if you do invest money, and you're going to take your cash values and you're going to invest those cash values in yourself, let's say, you had better be confident in your own ability as a human being to turn that into something else. Because otherwise, you're going to lose cash values there too. Like you're still going to lose your cash surrender value. If things don't work out, you're going to lose the cash surrender value. So if you're investing in somebody else's business, then again, and by the way, when you invest in stocks, you're investing in somebody else's business. So if you're investing in Tesla, I was investing in essentially Elon Musk and his ability to generate profits in Tesla. And also other people, the people who work there, right? So when you buy a share of a company, you become a shareholder. So I was buying shares in a company, I become a shareholder. So I become effectively an owner of that company. So I need to be reasonably confident in what they're doing at that time, and have not necessarily absolute certainty, but have really good confidence that what they're doing is going to pay off in some way. And I did, and that's what I did, and that's why I did it. So you just have to be careful about how you invest, what you're investing in, and how you invest in it. But yeah, you can borrow against your policy for any reason, including to invest in yourself or in other companies. By borrowing against my insurance policy to make an investment, I was able to kind of boost up the rate of return on my policy, because the real cost to me, when you borrow against a life insurance policy, the cash values are still growing in the policy. So the insurance company, all this time, for those years from 2019 to 2021, I still got dividends on all the cash value that was in my policy. I was still collecting dividends during that entire time. I was being charged interest, but I was paying the interest out of pocket, but I was also collecting dividends on all of my cash value. It was all still in there. So I was earning interest there, and I was also getting gains from the investment. So that year, I'd say this: last year, I got back into active trading, and I've done. The first year I started getting back into active equity trading, I did 167 trades, including many crypto-related trades, partially leveraging my whole life policy cash values for those. Most of those trades had been successful, with 3 exceptions. And there's the risk. Yes, you can borrow against your policy to make investments. You always introduce an element of risk by doing so. Things could turn out very well, like they have in my case. I think they turned out fairly well. Now, I'm not saying I haven't lost money in investments. Everybody loses money in investments at some point. Something happens, you make a mistake, the market turns against you, something goes wrong. That's the risk. So you could lose money, but you could also turn it, and you could make a lot of money, but you could also turn against you if you take excessive risks, or if you don't understand the risks that you're taking. Again, I'm not going to give you investment advice. I'm not going to tell you should or shouldn't do it. I'm just telling you, can you? Yes. I hope that answers the question. Anyway, thanks for sending them in, and I will see you in the next one.
Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to therogueagent.com. TheRogueagent.com. And sign up for my daily email list.